All right, what's up, YouTube? This is GMAC. I'm going to go over my model and also my recent payout. Show you what's going on with that. And I talked to a guy today from India, and I'm going to try to explain some things. Um, so when I trade Asia, this dotted line here is the 730 price. I'll move it down just a little bit. Right there, close enough. To me, 730 is opening price of Asia, and the reason for that is quarterly theory. And what quarterly theory does for Asia is it breaks it from into segments of like 6 to 730 is quarter one, 730 to 9 quarter two, 930 to 1030 quarter three, and 1030 to 12 quarter four. Now this right here, where this was a big juicy fair value gap, and now right here we have inverted it. So before, if it goes up into here before, it's already took out a swing low, um, before getting down to here, this would be a prime area to sell because this again is a balanced price range. It's like almost an immediate rebalance. We displaced and we come back in here a few times and we failed and we created a fair value gap here. Um, but my rules, okay, are I only sell above 730 open and I only buy below 730 open. Non-negotiable. Rule number one. Okay, what I was looking like when I trade Asia, higher time frame, you can look at the hourly, but you can see, basically if we take out an hourly low like this candle here, like the 6 o'clock, we took out the previous low and then we start going the other way, then I think we're going to go after its high. It does that a lot in Asia, especially when was it? Not before last. I saw a good example of it here. Yeah, like right here. You open up, take the low, and then you go after the high, and then after you get the high, you go after the low, and vice versa. No, it's right here. Okay, I'm sorry. It was last night, and I actually traded this. Um, 7 o'clock candle opens right here, right? And we go all the way up, and look, it just manipulates the high. It's not displacing. So as this wick comes back down, and look, there's fair value gaps where? Here. So we have made a swing point here, barely. You see how we go over these two highs to the left of it right here? Barely sweep that high, and as it starts coming down, you got to think, okay, this is 4 o'clock. Where are we going? My next thing, all right, 7:30 open, sell above, buy below. Pretty easy. Okay. Next thing you got to know is manipulation versus displacement. And what that is a prime example is right here. This 4 o'clock candle on Monday manipulates these highs. That means it just sweeps it and then right back down. A displacement would be like this candle goes through it, comes all the way back down, and boom, shoots through it. So it's likely to continue. If you displace, you are likely to continue. If you manipulate, I'm looking for it to go to reverse to at least the previous hour, hourly low. Or in this case, since we made a swing point here, since this is internal or external, since it's a swing point is external, a fair value gap is internal. So we make a swing point, we manipulate it. So where we're going to go? At minimum, we should go to fair value gap. And there's one right here, and that's what it does. The market is going to go from internal or external to internal or internal to external, meaning external here, make a swing high. So then it's going to go to internal, meaning a fair value gap. And then it's going to make a new high. And then it should come back down into a fair value gap. So that's what my draw was coming into this session was, okay, even though we are super bullish, we are going from external back to internal. And this is on any time frame. So I don't trade the hourly, but I'm just showing you the hourly because that's my higher time frame for Asia. Okay. What got me in this trade tonight, and I'll show you the trade I took, was the 15-minute. And this is my trade windows 7:30 to 8:15 on the 8 o'clock candle. That's pretty much what I've mastered. And as you can see, look, we got a big juicy fair value gap here that we made previous session. So if it's going to respect this, and look at the bodies respecting this. And if we draw a fib, it's probably likely respecting the midpoint. And I didn't draw that when I was trading, and I should have, but look how the bodies are right on that midpoint. So that's giving you an idea of how weak we are. Now, if we had been closing up here, you know, I wouldn't like that. The best ones are going to be halfway or below, and that's what ICT says. But I eyeballed it, and I was like, all right, we're right in the middle of this thing. At 7:45, we start coming down, and I'm in this trade here. I don't like being in a trade right at the 8 o'clock candle, but as you can see, let me go to a 1 minute. I was in this wick here, and all I need is 20 points. I was in at 300, and look, that's another thing, a logical level, 21,300. Even numbers or like 300 or 250, 275, 220, 200. If you see things start to fail around those levels, especially like 300 levels, 250s and 200s, multiples of 50, you know, that was another confluence. I was like, okay, we're at the 300 level. We're in a, see how I'm stacking confluences. I'm like, we're on a 15-minute. We are in a bearish fair value gap, so we should go lower. On my hourly, that's my biggest time frame for Asia. My draw was at least getting down into this first fair value gap here. Not all these, but just at least here because we're going from external back to internal. So that's where it starts. Higher time frame analysis. I'm like, okay, what are we doing? All right, we're making swing. We made a swing point. We made a swing high. We've made internal, or we've made an external. Now I think we're going to go back to internal. Okay, so I'm bearish. Okay, so then I get on a 1 minute and I mark out the 7. I got the 7:30 open marked. I'm selling above, buying below. And okay, we've done that. So I got on a 5 minute and look right here on a 5 minute, same thing. We have a bearish fair value gap, and at what time? Macro 7:50 to 8:10. From that time frame, we are going to do what? We are going to trade into a fair value gap, or we are going to take liquidity and make a swing point, a swing high or swing low. So I'm like, okay, all this stuff's starting to line up. So let's get in. So that's where I got in. And I should have held, it looks like. That's the thing that I'm struggling with is holding trades because, where I'm trading these prop firms, I'm just trying to get, some quick money and move out. But right now it's another 20 points, and that would have been, another $400 or $500, depending on how much you go. But I've just got to trust myself more. So my model is not mechanical. There's a lot of there's confluences to it, but I'm a discretionary scalper. So I can't, it's not like something you can automate that I can say, these are all my rules, and if it does this, but that's not trading. Trading's not mechanical. You can have a mechanical risk, and I'll show you what I risk, but I'm trying to go over the strategy. Okay, I start at 7:30. I'm gonna recap. Start at 7:30, mark out the 7:30 open. Sell above, buy below. Okay, I start at the hourly and see kind of what we're doing. I look at the close, the 4 o'clock close a lot. And we close way up here, so that's not something I'm really worried about. But on the higher time frame, on the hourly, I know that we have made a swing point back to internal. Made a swing point. Now I think we're going to go back to internal. We don't have to. We can keep going and making, you know, higher highs and higher highs and higher highs, but eventually the market's going to come back to internal liquidity. And so when I saw how the market's moving, I'm like, okay, I'm pretty sure we should be coming back to internal, at least to, you know, the 21,230 level. Um, but I do incorporate the bodies in these fair value gaps, like right here. But on a smaller time frame, I do. On the bigger time frames, I don't. It's just right. So it'd be right here, about 233 or under. If we got to about 225, I would be out. I mean, it could go lower, but you're just flirting with it. But you have to watch, like when this hourly candle here goes under this one, the previous one. If we take the previous hourly low and start displacing the other way, I mean, you got to get out. And like right now, we are busting through. Looks like, yeah, I really think we're going to hit the 233. Yeah, 233 level. Where's that at on the chart? 233. Yeah, I think we're going to take all this, probably hit this order block right here, and then I wouldn't be short anymore because it's below 730, and I'm thinking that's what we're going to do. But so how I approach Asia is 7:30, mark the open, buy above, sell below. I get the higher time frame narrative like I've showed. I'm looking for internal to external or external to internal, and I'm using manipulation versus displacement, meaning if we're manipulating highs or lows, we should reverse. If we're displacing through highs or lows, we should continue. Since we have been manipulating on an hourly, we're not displacing. We're just manipulating highs. So I was like, okay, here we go. I dropped down from an hour to a 15. See this big juicy fair value gap here? At what time? 7:45. I'm like, okay, that's my time. It's above the 7:30 open. Things are lining up. So I'm getting in a trade and looking for, I'm not looking for the whole move. I'm not looking for the whole hourly impulse. I'm just trying to get on the right side of the hourly impulse. And that would be whether I trade New York, London, Asia, or whatever. I'm trying to see where is the next hourly candle likely to go. And that's how I'm getting my narrative on my trade idea. But when I see something like this in the chart, and my higher time frame draws 233 right here, probably the body of this, no, a little above it, right in between, right in there. What's this? Wasn't there a 5 minute? Yeah, 233. Yeah, and a fair value gap. So this level right here was my draw, was right here. And on a higher time frame, that was here because of the hourly. Using the hourly as my higher my highest time frame. And then I just work my way down. Okay, hourly. I think we're going to go lower. Okay, let's get on a 15-minute. Maybe we'll get an entry. Oh, yeah, we're right here in a fair value gap. Okay, let me go down to a 5-minute. Boom. That's where I entered, was on the 5-minute. When this at 755 open, goes straight up into it, hits it, rejects in that wick I'm in. I don't normally do that because it's so close to 8, because sometimes the 8 o'clock candle is just straight manipulation and it could do anything and go down, but it did go in my favor, as you can see, and my kids are going wild. But I was in this wick coming down. I was right at 300 was my entry, and we went all the way down to 280, and that's all I needed was 20 points, and I was out. So I saved myself looking at this getting inverted even, and you know, you get on these lower time frames, you see a lot of stuff, but you have to. The higher time frame wins. The lower time frame will tell you when to get in, like this, a strong rejection from what? Just not anything, from a consequent encroachment of a 15 and a 5-minute fair value gap. So that is how I trade Asia. Those are my confluences. I use fair value gaps and order blocks only. I know what a breaker is. I know what all this other stuff is, but I try to simplify the approach. 7:30 is my open. Sell above, buy below. Start at the hourly and try to see what the market's doing. Find a draw. Where do I think the market's going? Are we internal, external? Are we manipulating? Are we displacing? Then start going down the time frames to find entry. And I love to enter from 7:45 to about 8:05. That is my 20-minute sweet spot. Really, it's about 7:10 to 8:05, right in that macro. But sometimes it's right at 7:30. You'll see a 7:30 candle that goes straight up into a bearish PD array, and then it's like, boom, I'm selling, and it just dies. So that's why I started doing that at 7:30, because I've traded this enough to know that what happens between 7:30 and about 8:05. You can make a living doing this, and that's what I plan on doing. But if you have any questions, please feel free to um, leave a comment or whatever. I'm trying to be thorough but simplify, because I have to be simple. If you have a real hard strategy to use, it's going to be real hard to um, execute. And we haven't got to this level. I thought we might just jump up there into this balanced price range. That leave a higher PD array at 2. If we jump up here and it starts respecting this level before taking out the Asia low at 248, I still think that's a good level. Now, if we take this out and go down, then come up, no, I wouldn't be interested. But if we start to retrace up here, I would look for an opportunity to go short. But you can see how it's respecting these bearish PD rays on the way down. But let me show you my accounts now. Enough of that. Let's get to, I've already got myself locked out. Just for transparency, I only had $500 and some of drawdown left, so I was, as you can see, 326.60, and I got it times 3. These other two, I'm waiting on a payout. See, I got them up to 1180. So I took a $590.25 payout out of all 5 of these. I got these 3 already adjusted, but these 2 haven't yet. It says maximum. Oh, it did change to 0. Okay. It went 0 when I started, but yeah, see what I mean? I can't go below. Once you take a payout, you can't go below 0. So that really helped. A good day got this up. Performance stats. My winning percentage is higher than that. I don't know why it's saying that, but here's kind of most of my trades are 2 to 5 minutes. I think I like to go short. Yeah, I go short a lot. Yeah, most of my trades are short, but Tuesday, yeah, I was waiting on a payout. 1, 2, 3, 4, 5. Waited on a payout. They adjusted it. Boom, got it. And that's on 3 accounts. The other 2 look like this. 1, 2, 3, 4, 5. And a lot of these are me adding in because I'll start out with like 10 micros, and I'll do 5, then I'll do 5, or I'll do 5, or I'll do 10, then 2, then 2, then 2. I'm always doing something a little different. I need to get better with that. But that's what that looks like. And get on here and see what my actual stats are because they show it better. They show the stats better. On here. Let's get one that's a little. This one's fine. Yeah, 71%. We're getting it back. Risk reward 1.5 to 1. It's a little better. Trying to get 2 to 1 because I try to risk 8, 36. I try to risk 6 to 10 contracts, or 6 to 10 points. To get 10 to 20. I'm looking for a 20-point run, and just usually taking half of it or 3/4 of it. But um, God's been good to me. If there's anything I can do, any questions you need, or anything like that, just let me know. I try to make a good video and show my Asia process and how I trade Asia. I have to trade it because of work, and I work because of the consistency, the stability of the paycheck, and I've got good insurance, and I am, this is only my second year. I've only been profitable about, 3 to 4 quarters, going on my fourth quarter. So, I'm still learning. I'm still trying to grow. I'm still scaling, and until I make, enough money to where I feel comfortable. That's I don't want to put any extra pressure uh, on myself. But God bless you. I hope this helps. Good luck trading.